Welcome to TradeTheMBI.com. This is John. This report is for the 21st, and well, we've had a continuation of the orange moving now through the cyan and should give a continuation boost. We are below 7.5, so that officially gives us the opportunity from a daily standpoint to move towards a longer bias. We're also seeing a continuation of the rising red. We also have the green moving above shorts as well. So all things being equal, not a bad setup. Now, obviously, we're looking at a slight dip in the market right now, but not enough to even make a difference. At this particular point, though, we're getting close to that end point in the election where I think the significance of the polls is going to rise, because now you're getting into that final 3-week period where the companies that are issuing these have to prove that they were correct going into the final stages now that the last debate is in there. And like I've said, market correction would be necessary if we're looking at an adjustment that they have to move from expected HRC win to Trump win, and that would cause some reallocation. And it wouldn't necessarily mean that the market's going to go down. It just would mean you'd have temporary moves in between. That could mean increased volatility going here forward in the next week or so, which is not a big deal to us because intraday charts will be able to see it very clearly. NQ, not looking bad. Of course, there's always earnings, but that's going to be less significant than the perception of where things are headed 6 months from now, because that's really the telltale question mark that the market's really working out, not so much worried about what individual companies already did the quarter before. It's where things are headed. So the Dow, likewise, going to continue its move across there. That's also going to produce similar kind of daily. Very interesting watching the euro continue its drop. Now we've broken below previous low here, headed towards my 106 range down here. That's the marker. It was like right at 107.5, but I think the lowest side of it could be right around the 106. And you can see this is what we talked about, that orange staying right in the middle of that zone. Continuation call. Not to mention minus 22 for the shakeout. You got to be inside minus 12.5 for anything to be kind of a positive run. Bonds, again, I said that any pop was going to be short-lived. And the fact that we have another interesting dip here going back, but getting closer to improvement from the shakeout, and that it's just getting closer to an overbought. Not there yet, so maybe it has a little bit more, but I would guess that any movement there is only going to be a flight to quality if there's a continuation in market dip. Otherwise, you really don't have a choice. You've got to be in equities. USO has been holding up pretty well, actually fairly decent, but you can see here, rejection of the red at the cyan right there, but red continues. So there's still long-term buyers flying into oil at this point. Should be able to hold it up even though we see shorts increasing into it. They're just trying to attack the highs, but that could foster another little run up. And gold, minus 20 on that shakeout, not quite ready, but it's been a decent little pop-up. I felt there was resistance right there around that 121 range, and it's proven to be the case at this particular point. And from an ES standpoint, a little choppy, had little buy signals. We faded a little bit. Really wasn't anything significant, but interesting. You never got oversold on any of these because the red never dipped below the negative 13, and it just produced little pop signals, each one. Then we finally started to break down with a strong DOC where the orange moved into the plus 13.5, and that created the significant decline. And then we ended up with the similar dip right there, and then once we got below the 7.5, shakeout was in the right situation, as well as the extreme histogram right around the 31. We popped up again, put in another sell signal not that far away at 35, and that's what we're looking at from this particular standpoint. At this point, it's interesting because some people will notice, you did get the orange dip here, but you never got up to the 7.5. Typically, I would look for something a little over 7 in that particular case. In this case, I only got to 4. It just isn't going to produce any impetus, and that's why you need a significant move higher with the orange moving below. And see here, we have it now. We're stuck right in the middle between the two. I would expect continuation lower on that. So at that particular point, this is where we're at for now. We'll continue to follow it. Again, I think that daily upside bias at this particular point still exists, so definitely when I see buy opportunities come on the 5K or lower time frames, it's worth jumping to the long side on those. And again, we have our pivot, which has always been that ABM right here, the 21-29 range. So as long as you're above that, still to the long side. If you're looking at it from a larger macro buy, obviously intraday, you can play with our 5K or any time frame in between. And that's just a matter of your preference. As always, though, continue to look for me on the Skype chat. I will keep posting relevant charts as needed. Trade well. We'll talk again later.